Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it's Wednesday, it is the middle of the week. We just had our Fed minutes and market sold off a bit, as it seems as if the economy is getting better, but people don't like that because maybe the Fed's going to take away their $85 billion that they've been purchasing for a while now. With that said, there's always little signs to look at, little signs to acknowledge, little signs to make adjustments, especially if you're an active trader. On Monday, we talked about the push above 1800 in the S&P, the close below. I think on that day I had 10 plus positions, went down to basically, I would say almost net short, and then I've been kind of tactical since. And on that day, there was a lot of high beta names that we went over in the Tuesday morning call where it was prudent to switch some gears. Lock in some gains, maybe look for cute shorts, and who knows what they amount to. But at least if you acknowledge it and you're a big boy and you play by big boy rules, you can be safe and you could take the other side of the trade, which is what a lot of people try and do. So first things first, if you look at the chart of the SPX, you will see, you know what, not the end of the world, right? If you look here, this was your small little red dog reversal right here at 1798. We hit a high here of 1802, and now we closed down here. What was the low of the day? The low of the day was 1777, which was a touch above the prior breakout high of 1775. So all in all, right here, if you did sell some strength and then use, a high level stop, you saved yourself 20 handles. And for some people, you know what, 20 handles isn't a big deal, because if you would have done that a few different times during the course of the year, whether it was this breakout failure, and if you did not get back involved when it hit the trend line, you missed that, or when you're this head and shoulders top, if you sold there and said, okay, I'm in great shape, look at this, wow, we're heading lower, and you didn't get back in, you missed that. Same way on May 22nd, when you had this outside day, if you sold there on an intermediate basis, good job. Good job, sell, good job, sell, good job, sell, good job, sell, but did you buy it back? And that, with that being said, you go to the trend line since this November area, and really it pierced it right here, but came back above it, and look how far above we are. Felt today like as if people were calling for the end of the world, the market was crashing, and this is all we are at. We're at 1780, 22 handles below the high. At the 8-day, not even at the 21-day. So I just don't want people to get spoiled. The bulls are friggin' spoiled. Okay, with that being said, come back to me. We like to play high beta, fast moving names. For the past 3 months, 6 months, we've been trading in and out these 3D printing names. And then on Monday, finally, you had that shooting star top or the push through failure or the red dog reversal. So on Tuesday, once that took place in a lot of high beta names, that was, I think, either in the sector spotlight or in the trenches where we went over patterns that gave you a cautionary sign to take some money off the table if you've been riding it, or, look, if you were trading for momentum and momentum left, you leave, or you look for a short because you never know what it's going to amount to. So some of those names, Triple D, boom, look at that. That was that shooting star top or that stretch doji. And even if you didn't short on that day, you could have shorted below the prior low, which is a nice strategy that we have. And look what took place. From 85 down to 69, risk happens fast. Okay, the time that we were looking for a breakout was all the way down here. So whenever you sit with these things further than you want to, you just got to make sure you're on top of things, guys. Look at the size of the space. Very, very big. Here is your run up. Nice little buy area right here. That was your topping tail. That was your first signal to either look at this, if you've been not looking at during this miraculous run, or if you've been looking to get short, here's your first signal, especially if it broke below the prior day's low. Now look. Citron put out a little report on VJet today, again, this is the same type of scenario, okay? It was an unbelievable IPO, 2 days, broke above this little wedge type pattern way back when. I think we listed it down here. And then it broke above the IPO high and gave you a nice run. It didn't top on that day, but then it gave you that topping tail the next day when once it recrossed below this low, that was your signal to take profits, maybe even get short. Depends on your timeline. I know Mike Lee and I know Steve LeVay and some of those guys have been looking at it, and nobody would have thought that it would have got crushed as harsh as it did today, but Citron put out an article showing that they sold like 3 or 4 jets, if that's the case, and then that's what, that's where the pressure came. So sometimes these new issues, as profitable as they could be, if you're playing them that way, you got to make sure you witness the change and see the composure. Just leave. And look here now, you'll see the stock from as high as here. This was your stop. Unbelievable, crazy engulfing bar all the way down. And at this point, it's right back where it started. What we do know is 38.75. It closed in the dead low. Some people probably took it overnight. The real play, I wouldn't have done anything overnight. I would say, you know what, it's come down way too far, too fast to be short this overnight. And if you're trying to buy it because it's been so discounted, the momentum still looks like it's to the downside. So for me, I'll look for a red dog reversal tomorrow. I'll see how it opens. If it opens up $4 or $5 and you took it home long, congratulations. If it opens up down and $4 or $5 and you're short, congratulations. I'll wait to see what happens tomorrow. I will measure it and I'll use this as my pivot, and we'll see if we can get some kind of trade that's calculated and controlled tomorrow there. So let's move on. A few other names that were weak or failed that Monday. One of them was Google, right? Google, I was trading or looking for a nice little trade above 1,041. It happened and it traded below. So that got me out of my trade. I was playing for a breakout move to perhaps somewhere north of 1,060, 1,080. It tried and failed. Not ready. Out. Now it's at 1,022. Still looks good. Still above this pivot at 1,017 when it broke above, which was a nice trade for some there. And still above the earnings gap. So all in all, it's fine. But if you were trading for momentum, momentum left. Now you leave it alone. Apple. First day in a while, I did not trade it once. Not once today. Because you know what? It was an A trade for me. I've been trying to trade this thing. I've been trying to milk as much as I can out of it, stick with it, stay with it, be an Apple fan. I have an iPhone, I have an iPad, I have everything underneath the sun. This stock changed character right here on that gap up 2 quarters ago. Gave you a nice trade, gave you the retest, gave you a break above this 490, I remember. And now we've been trying to figure out, can we get another trade here? And this is when I got very excited. It was very exciting. Wasn't this exciting when it broke above 523.92? Closed well. Friday, I gave it an excuse. I'm like, you know what? It's option expiration. I'll take some size off, but I'm going to hold a little bit. And then once it crossed back below 523, I'm out of the way. And now here it is at 515. So to me, not looking like it's going to break above this anytime soon, which is my thought process. Market looked as if it was going to happen here. Didn't confirm it. Now, here's your next level. If it breaks below 512, you could see a move down to this prior high here or this prior moving average of 501. So I'm out of the way. Not my cup of tea. I'm not sticking around. I'm going to wait. And I'm going to see what happens with this market too. We'll see if we hold 1775. We'll see what happens with high beta, because some of these, small chinks in the armor are starting to add up. I came in short Facebook. I got squeezed out today. Tomorrow, maybe I'll see if that trade works itself out. You look here, it's still looking pretty negative. I was very bullish on this to start the year. Way down here, way at, this little cup and handle pattern coming all the way down here. And still thought perhaps it could continue, and it had a great move 2 quarters ago, all the way up. And now it looks like it's still trying to figure out how much it wants to correct with this little head and shoulders pattern. You fast forward to right here, and I know it wasn't weak enough yet to break this area, and it squeezed me, and I lost money trying to be shorted, but doesn't mean I'm not going to try it again tomorrow. If this thing gets down to 45.72 and it looks like it's going to break, I do think there's a trade there. It could take you to here, it could take you to the moving average, but overall, it still looks like you have this head and shoulders top pattern, and it just hasn't given way yet, but it looks pretty darn close. LinkedIn also still pretty negative short term. From here, if you're long from this cup and handle pattern, which we talked about way back when, I don't think you're really sweating at all. You're just giving some money back, which hopefully you're a little bit hedged. But overall, look where it came, look with the topping, look where it is now. So just looking at this little weekly pattern, it seems as if it can get down to here and still be relatively in good shape, considering depending where your entry and exit has been. So short term, looking at it, it still looks like it's relatively weaker. Here's when earnings came out and it broke. Here's your little bear flag. It finally bounced, and now it's just trickling lower. I don't see anything compelling there, so I would just be out of the way. It's kind of embarrassing that my biggest long position right now is Zynga. And I guess it's not, because it made me some decent money today. And if you look at this chart, it's been, ever since the failure here, and it did fail, this topping tail way back when, right there, up as high as 16 was your sell signal. Then this was a sell signal, then that was a sell signal, then when it broke here, you had a sell signal. And now it's been literally basing for almost 2 years. And now for the first time, if you're an institution, you've been accumulating it between 3 and 4 and change this entire time, it does look as if you can get a gap fill, or maybe even a move to 6, which I do think is in the cards. So today I talked about perhaps getting above this area, and if you are a trader and you see how you finally had a move above 4, which it hasn't had for a while, it then pulled in, held higher right here. Oh, come on, grab that little pencil. I love my pencil. Held high right there, and then from there, I bought some in here, and then it traded above this 412. You could have added, and then it closed really strong on a day that, that we pulled in. So that shows you relative strength. It has a price pattern. You go to volume here. Let's see if there was any volume here to see if it went alongside it. The stochastics are pointing up. Okay, hold on. Let's get to the moving. Where's my basic size? There it is. Boom, look at the size of that volume there. Volume was attached to this breakout. People say, oh, there's no volume in the market. Doesn't matter. It matters when it breaks out. So that shows you some commitment to it. So with that being said, you go sideways, sideways, sideways. It's just starting to break out above this level. This would be a day 1 out of this long range, and typically you get a day 2, 3, 4. So something to stay with, even if the market corrects a little bit. Sometimes they like to go after the little guys. I also talked today about this USU that didn't show commitment, so I got stopped out. The Onvo, which Sperling was trying to find the bottom with, go to that chart. But, the 3D printing stocks did not, so it just shows you that you got to be very careful, guys. When these air stocks just collapse, here is the right buy price. And it happens quick. Risk happens quick. Have stops. This was your stop at 12 bucks if you rode this the whole way. And then today, it tried to do a red dog reversal back above the prior low and failed. So tomorrow, we'll see how we open, and then we'll measure it versus this 783, if that's what you're looking at. From 14 down to here, that's harsh. These things are harsh. This type of volatility are for the big boys. You have to have rules. You have to be careful. Same thing goes back to the VJet. If you're going to play it and try and make money from 40 up to 70, you better be on your toes if something like this takes place and know how to deal with it. Today was a level versus a level. Instead of trying to catch a falling knife saying, oh my goodness, it was here above 60. It can't go below 45s. Yes, it can. So with that being said, you have to know how to deal with it. Stocks move fast. If you're going to play the momentum names, when momentum leaves, you better be quick. We saw momentum leave in Tesla when it failed to make a new high with the market even before earnings. You look at Tesla from back here. Okay, let's get this volume out of the way just to make it a little bit cleaner. Okay, and this was the spot. This was the spot even prior to earnings when this trend changed. When for the first time it didn't make a new high before the market. That was cautionary sign number 1. Pulled in, came back up. This was prior to earnings. I don't take stock into earnings because I think it's a coin flip. If you're in it for long term, granted you miss out some gaps, this and that, but at least you're safer. So if you sold here, you did not get involved into this down move. Lots of different times. Here's where the last support broke. Here is where your other pivot was early in the week. Had a little bit of a tactical long. And now it's looking wishy-washy, right? This to me is telling me it could be going lower again. So tomorrow if it breaks 119.06, you got to get out of the way. I'd be a little careful pressing shorts because of the size of the move from 194 down to 121. If you're trying to play it down to, support lower, just be careful because it's not the easiest thing to do, and there is a definite talent to it. And I think the next 200 day is down to 107, so you do have some room besides the other one at 117. So you do have room here, but a lot of the short money has been made also. So just know that this is not the easiest thing to do, to be shorting it through a new low now, even though here is very profitable for some of you. So with that being said, it feels like the market is definitely a market of stocks where some things can be continued to be stayed with, some longs. Some things you better get out of the way, take your profits and maybe flip short like you saw the 3D stocks. Some things where you thought momentum would come in, like your Google, your Amazon, your Apple, didn't have momentum. Now they're still okay, but the trade changed. The banks have been stronger, but you have to be a little skeptical when the market's getting a little bit pressured. We've had 3 down days, pretty controlled, still above the 21 days, still above 1775, so it's still not the end of the world unless you chased up there and now you're shaking in your boots. So with all that said, low gross, low net, figure it out. We talked, I think, earlier in the week, I said, you know, we've been up 25% in the S&P. Investors don't care if we're up another 2 to 4% or down 2 to 4%. That the real money's probably been booked already for the year, that this is a time to preserve your gains and try and just tack on some money if you're trading for P&L or for alpha. So if you're going to be tacking on for P&L or alpha, you better be in tight. You better watch the composure, the speed. So this way, if things change, you change. You don't get caught. You use your risk-averse measures or your tactics in order to get stopped out if you're going a level versus a level, and don't put yourself in harm's way. We have a week until Thanksgiving, one of my favorite holidays out there. Do not go in there with a negative head. There's no reason. It's been too much of a calculated year. I do leave tomorrow for the West Coast. I'll be here in the morning speaking for Schwab in their booth, 3:15 to 4:15 on Friday, 10:15 to 11:15 on Saturday. I hope to see you there. And continue to take your trades and be safe out there. There's no reason to press here. Scott Redler, T3 Live, the recap. See you tomorrow morning. Have a good night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.